Oh, for so many of us, procrastination and taxes go hand in hand.
Oh, yeah, but taking the right steps to prepare now can make it easier to file your tax return long before that April 18th deadline. Elijah Kovar from Great Waters Financial is here with the best ways to prepare for tax season. Good morning.
Good morning.
So I know at our house we're starting to get, the W-2s in the mail. That's the first thing you need, right?
The first thing, and there's kind of two categories, your income documents and then our write-offs and things that we can take off of our income.
Sure.
So first and foremost, those W-2s, any 1099s if you're self-employed or have other income sources, K-1s for business owners, and there are other 1099 forms that we will receive. Dividends and interest income from non-IRA investments, any IRA distributions, Social Security and pension. Then we want to make sure that we're claiming any capital gains. If we've sold any property or losses, which can reduce our income taxes. Then finally, it's the expenses. Your medical expenses, maybe those are deductible. Make sure and give those to your CPA, charitable contributions, and any health savings or IRA contributions.
Second thing you're doing to get ready is kind of figuring out how are you going to do it? How are you going to prepare your taxes, right?
Yeah. Do you do it yourself or do you hire a professional? And I think that's the question everybody.
We've done it both ways.
Yeah, and
both are good.
Sometimes it depends on how complicated your taxes are too.
Certainly, and I have clients who they'd love to save $300 or whatever it is this year because they've been doing their taxes for decades, but then we do something like a Roth conversion, or we use a donor advised fund strategy, and they're not quite sure how to fill out that form. What I would say is self-file if you feel completely confident you know exactly what you're doing. Make sure you have the right software. Otherwise, identify a competent CPA who can help you out with that. It's worth the investment to make sure you don't miss anything.
That's true. And you also say contribute to a traditional or Roth IRA.
Sure. A lot of people, they had their 401ks or 403bs that were being contributed to throughout 2016, but they don't realize they can contribute to a Roth or a traditional IRA. If you didn't contribute in 2016, we have until our tax filing deadline, which is April 18th this year, to get those contributions in, which could be, well, it's first of all a tax advantage way to grow the money. Secondly, you could get a deduction on your taxes for that.
So consider that for sure. And then the last thing is some of us need an extension, right?
Yeah, and sometimes we hope this isn't the case, but people are slow to get those 1099s out or things just aren't organized yet. That's okay. You can file the extension. We don't want to do that, but if you have to, there's no fee for doing that.
You still have to pay an estimated
You
taxes.
still have to pay in, and if you owe more than what you paid in, come October 15th, you're going to be charged penalties and interest potentially on that.
Yeah, want to avoid that.
Yeah,
So
you have an extra
done.
6 months if you file that extension.
Okay, Elijah, thank you.
Thanks for having me.